Just know, let's talk about it. There is a method to investing that actually works, which I'm going to explain to you, but there's also this common misconception that you should invest in real estate and you would be a millionaire. Which I mean could happen, but let's talk about it. These gray areas indicate recession. In 2008, we had the great financial crisis, which was a housing bubble where the Fed dropped interest rates to nearly zero to stimulate the economy. There's also an oversupply of homes, more supply than there is demand, prices down. Interest rates are not near that level, and we have an inflation problem, which means the current setup is not conducive for you investing in real estate right now. Now, if you were one of the fortunate, probably boomer, who invested in real estate post-Great Financial Crisis in 2008, well, of course you're a millionaire because your equity in your home more than doubled and you had it at record low interest rates. But today, not only do you have high interest rates, you also have high housing prices. Let's see what the top 1% are doing. Oh, okay, well, post-Great Financial Crisis, they did hold mortgages. Very interesting. Post-COVID, they do not. Follow the money. This is something called the investment risk scale. Things that are at the bottom are considered safer, lower risk. Things that are at the top are higher risk. And actually not depicted is Bitcoin, which should be at the very tippy top. Real estate is actually in the middle risk category, and it is riskier than large cap equities. Large cap, keyword there. People tend to like real estate because you can touch it. Can't really touch a stock, but you could walk into an Apple store. Like, you're a part owner of that. If you buy Apple, not financial advice, this is literally an example. Here's what works. This is why finance is personal. You choose an investment mix that you are comfortable with. This is what diversification means. It does not mean a passive index fund. It means a portion of US stocks, foreign stocks, bonds, and shorter term investments, which are cash equivalents. You can be conservative, balanced growth, or aggressive, or come up with a custom strategy with your financial advisor, or use a lot of tools that are free at your brokerage firm. This is called asset allocation. So if you want to understand how the system works, even study history of the stock market because it haunts you. Check out my podcast, Market Maker. I teach my friend. I've been working in finance for 16 years. I gave up my financial licenses so I can do stuff like this and show up on social media because we're responsible for the next generation. Boomers invested in real estate, Gen X too. Millennials invested in their education and have the most debt. And Gen Z is investing in investing education.